Hey everyone, Jeff Dorman back again. This is That Are Two Satoshis Live as part of Arca's continuing education of digital assets. Taking a little bit of a deviation this week. Normally we review the blog that we write, our That's Our Two Satoshis, which is a weekly market recap. But this week, as we're approaching the end of the year, we are going to focus on the newly written and released Arca 2022 Outlook. Themes and narratives that we're bullish on. So I am joined by my esteemed colleague, the head of research at Arca, Katie Talati. Katie, how are you?
I'm good, thanks, Jeff.
Good. I see you look much better heading into Christmas than I do. I don't shave or take care of myself in the last few weeks of the year, but still investing very strongly despite my appearance. For anyone who wants to follow along, by the way, we have the link at the bottom here, ar.ca/outlook 2022. That's where you can find our predictions. Let's go through a few of them, Katie. We just came off a huge year for digital assets, obviously both in terms of price as well as in terms of just adoption and institutional interest and company interest. We've been doing this, I guess, for the last 2.5 years. Every 6 months, we put some predictions out there. I think in 2020, we were pretty early writing about the rise in DeFi and especially with regard to rewards. In mid 2020, we started talking about NFTs. In early 2021, we talked about the rise in social tokens and sports tokens, things like Chili's and Audius and Rally. As we head into 2022, we got a lot of things that we're looking at. Before we start going through what we wrote about, what do you think? What do you think in terms of broad themes or just broad market direction of where we're heading after this monster year?
Man, well, obviously, so much has happened in the last year. It's hard to imagine that we've got a whole, many more years ahead of us of innovation. I think that, next year we're going to see kind of, I would say, a resurgence in areas like DeFi, and particularly around kind of like how DeFi companies structure and organize themselves around their DAOs and how they decide to use their tokens and their ecosystems. I think as a whole, a lot of people agree that most governance tokens alone don't necessarily provide a lot of value. And I think that next year is going to be like a slew of companies either revamping their tokens because they realize that it's not capturing that value adequately, or it's going to be projects really iterating on the value capture of their tokens. And we're starting to already see this a little in DeFi 2.0, right? With projects like OHM, Tokamak, any of the other kind of like newer DeFi projects. So I think it'll be interesting to see who decides to revamp according to this and who tries to innovate.
Great. Yeah, I agree with that. I think the what I'm hearing, if I had to sum what you said up into one word, it would be just continued evolution. I think a lot of things are up a lot this year, but it doesn't mean that it just is static and that's the entire investing universe in digital assets. I think we're going to see, like you said, we're going to see new sectors, new themes. We're going to see revamped tokenomics and a lot of resurrection products. So I think for me, one of the most fascinating things about digital assets is just how flexible these structures can be. Right, you're not locked into a token that just does one thing forever. We can change the inflation schedule. We can change how they issue buybacks. We can change how the tokens accrue economic value. So I agree with you. All right, so let's go. And I'll remind everybody before we go through these, but this is written by me, but it is on behalf of Arca, and a lot of the opinions that we have were driven by other members of the Arca team. But we don't always agree on everything internally. So there might be a few things in here that Katie and I disagree with, as well as some others in the team. But let's talk about thematic investing first. I'm going to read you a couple of the things. We'll just go one at a time here. Some of the things that either you, myself, or other team members at Arca think were going to be major themes going forward. The first is that NFTs will continue to grow and evolve. And I think the thought process there is a lot of the interest in NFTs and gaming has really been in art and collectibles, and maybe to some extent gaming. But the thought process here is that NFT value will start to shift away from that and more towards intellectual property, more towards royalties and rights. What's your thought there with regard to where we might be headed with NFTs?
I mean, that's already happening to an extent. I've definitely seen a bunch of projects kind of already try and tackle that. Obviously, it's more under the radar. It's far less mainstream. I think the hurdle there is that putting the idea of putting a contract essentially into an NFT, that is a harder concept for some people to grasp than to say, hey, like, look, you can own this collectible and it's one of one, like nobody else owns the same one, and you can prove that via the blockchain. So I would agree to it to an extent, but I don't know if it'll see such a, widespread like so much as much adoption as we saw with just the NFT space like over the summer.
Yeah, I think that's right. And I think, one of the things that, shout out to Sasha Fleischman, one of our portfolio managers here at Arca, who is also just launched a new NFT fund, which is launching January 1st. But I think what's interesting about some of the things that he is anticipating here is that you're going to see a lot of narratives come in, or create backstories to NFTs. So, for instance, Crypto Punks or Bored Ape Yacht Club, those are great stories, but there's not a whole lot of personality behind them. What happens when you all of a sudden have a comic book or a movie start to create characters, using these strong brands? Or what happens when you start to see personalities being put on top of some of these NFTs? Like there's a couple of AI driven NFT projects where you can actually train your NFTs to take on different characteristics. I think that's going to be super interesting. I also think the financialization of NFTs is going to be interesting, right? Pretty soon you will definitely see indexes and derivatives built off of floor prices of different NFT collections, right? Sort of like um, being able to trade just an overall NFT index based on what some of the prices are of the lowest cost NFTs in the collection. So pretty interesting to see. I think NFTs are going to be massive in terms of growth and evolution in 2022, and it sounds like you don't disagree with me there. Okay, number two, rewards will continue to drive upward pricing of assets. I have my thoughts there, but I'll turn it over to you first in terms of what you think that's going to look like going forward.
I mean, obviously, we saw a lot of this, kind of kick off in DeFi summer last year, with the idea of, getting folks involved with these protocols early on in a way that they, reap the financial benefits. The problem is those are not kind of self-sustaining programs. So I feel like what I've seen as of late and what I think we're trending towards with like a rewards type theme is that projects are thinking a lot more thoughtfully about how do I design something where, participants are rewarded, but they're also not incentivized to, move to the next hot thing that, you're creating like a sticky customer experience. So I think there's still kind of some evolution to be done in some of these reward schemes and how they work. I think I'm trying to think of kind of an area that we've seen. I mean, the idea, for example, back to DeFi 2.0, protocol owned liquidity. I know a lot of people are looking at that as a potential Hail Mary for the DeFi space. I think that still, in my opinion, has some time before we kind of see that play out and proved out. I think that, even now, a year and a half after DeFi summer started, like we're starting to now kind of feel, how potentially some of these yield farming activities were detrimental to these ecosystems. And you can see it now, like when you look at other chains and any of the projects that have popped up on there, like on Avalanche and Solana, people really just move their money around. There's not as much of an incentive to stay. And so I think rewards as a theme continue to be incredibly important, but I think the design needs to be much more tied into the usage of the protocol and into getting people into staying and consistently using something in their daily, workflows.
Yeah, I think that's right. I think the first iteration of DeFi 1.0, I guess is what we're calling it now, certainly hit the mark on some things and didn't hit the mark on others. And I think this idea of DeFi 2.0 is a little bit more incentive laden. I'll add two things though from rewards. I think the first one is um, every company is going to be doing this soon, right? It's not going to be just your quote unquote crypto native projects that do rewards, right? We're going to see every company start to incorporate this in some way, shape, or form, whether that's a Starbucks or a Delta Airlines or you name it. It's going to look a lot like what the 90s versus 2000s internet companies were, right? In the 90s and 2000s, internet companies were largely just internet companies, right? They wouldn't have existed without the internet. Now everybody's an internet company, right? Domino's Pizza is an internet company, right? I mean, that's the reason Domino's Pizza stock has been one of the best performing stocks of the last 20 years, is because they were one of the first ones to figure out that they could basically have tech-enabled delivery and turn their business around, right? Starbucks is an internet company with the way that you order online. You name it, from shopping, retail, restaurants, et cetera. It's all internet-based companies. The same thing's going to be true of digital assets, and the way they're going to do that is they're going to start to combine their existing rewards programs with something digital asset native that's going to bring people in my opinion, will bring hundreds of millions of new digital asset users into the ecosystem via traditional companies. And secondly, I think the other one that's most important with rewards is um, it's going to really be tough for arbitrageurs. Right now, there's a pretty big difference between spot and futures from a trading standpoint, right? There's a lot of projects, whether you're using FTX or Binance, where you can just arbitrage the spread all day long between spot and futures. But that assumes that spot and futures is exactly the same. What you're going to start seeing over the next 12 months here is there's going to be a huge premium on owning the actual token itself rather than a derivative of it. You started to see this a little bit over a couple weeks ago with OMG. At one point, the OMG token was trading at like 40% higher than the futures contract because there was a big boba airdrop that was given to you if you own the OMG token. I think you're going to see a lot more of that, where you only get rewarded if you own the token, whether that's an airdrop, whether that's some sort of discount, whether that's more tokens. You're going to need to own the physical spot, and as a result, you're going to see a massive divergence of spot and futures, where there's these derivative contracts that are supposed to track the price will no longer be anywhere close to the actual tokens itself. So I'm pretty interested in see how that develops, and I think you're going to see um, a lot of, like I said, high frequency traders or arbitrageurs who try to close those gaps. I think they're going to basically be out of business when you start to realize how important it is to own the physical token. Okay, moving on. We're moving too slowly here, so we'll go quicker here. And I encourage people to go read the blog themselves if they want to get the full detail here. Let's talk about DAOs and governance. I'll go first here. I think there's two things with DAOs and governance that are super important. One is that the treasuries of these projects are just incredibly large and incredibly useless. They're going to have to come up with ways to diversify their treasuries and use them for growth, right? Just sitting on dead capital that does nothing for you is going to be incredibly problematic and really not indicative of the growth of this industry. You want to put that capital to work and make it productive. And the second thing I think that's really going to change is what a DAO really is, right? We use decentralized versus centralized as black and white terms, but the reality is, like, it's a spectrum. Not everything is going to be fully decentralized or fully centralized, and these DAOs are absolutely going to have to change how they operate. For those who are aware, we're very active with SushiSwap, one of the largest DAOs. There's structural changes that need to be made in order for these DAOs to really function. And once we figure out that right formula, I think company structures are going to largely go away in favor of DAOs. What are your thoughts?
No, I mean, I would definitely agree. I think decentralization has always been a spectrum. And I think that labeling something decentralized can mean a lot of things. In terms of DAOs, I definitely feel like the second half of this year has definitely shown that DAOs still have a lot of iterations to go in terms of how they operate, communications, just workflow. I think the idea of having 100 people dictate how a 6-person company is run is a lot. And I think that we're just, even though we're in an internet age, we're still just not set up for coordinating those types of moves. um I think there's a lot to be done within DAOs in terms of like tooling that's available and resources. And I think I would agree. I think objectives need to be much more like streamlined and focused. There's also the difference between DAOs that are kind of just like, okay, DAOs that own a treasury for a project, and then a DAO that's like a actual like decentralized just group of people who either want to invest in assets or want to like, do specific things. I think those DAOs, the latter ones that I mentioned, have been more successful because they usually are like minded group that are just set out to like do one thing. Versus, I mean, and Jeff, you can speak to this as well, like working at a startup, things are already messy and disorganized. If you also then allow, a bunch of other people to kind of voice their opinions in the everyday running of that, small startup, it can it can quickly get very messy.
Yeah, I agree. I actually think the formula is somewhat simple. Let's see if we can pull it off collectively as a community. I think you want to empower the individual, whether you call them employees or project leads or whoever, you want to employ as much power as possible for small groups to create awesome projects and run their businesses. And then you just want the token holders through governance to basically be the board of directors, right? A passive group of people who vote on very big things once in a while. And ultimately, what happens is token holders become the checks and balances, right? You want a leader, you want a couple of leaders to drive the growth, but you need someone to keep them in check to make sure that they don't run off with the money or to make sure that they don't make really bad decisions. And that's where governance is really going to come into play, is having a very strong, a transparent cadence with regard to how often do we vote, what do we vote on, and making sure that we keep the right people in place so that they can, in fact, run these projects. So I'm pretty excited about the future of DAOs, but no question we got a lot of wood to chop to get this formula right.
Yeah,
All
couldn't
right,
agree
this
with.
one. Sorry, go ahead.
I just said couldn't agree more.
Okay, let's move on to one that I think is actually your prediction. I don't even know if I have an opinion on this, but I liked it, which is play to earn will morph into learn to earn. Um, I don't know if that was you or a
That
combination
was
of
actually
Rain and
Sasha's.
Sasha's. Okay.
That was Sasha's prediction. But I think I would definitely, I definitely think that is, maybe not morph into, but I think we're going to see kind of a subset within the gaming sector that caters towards this idea of learn to earn. So for those who aren't kind of familiar with it, obviously play to earn is the newly popularized model from Axie Infinity, where users can go into a game and they can essentially play the game, and via that game they can earn rewards, which are actually have direct monetary value. So this is a huge revolution, kind of in how the gaming model has been turned on its head, and it's a great way to keep players engaged and keep people honest, because there's no way to kind of game the system, right? You can't purchase more, you can't invest more to end up earning more. It's really based on like the hours that you put in. Learn to earn, is very similar concept. It is just that it's more about your attention and your time investment again. But I think that it can have a lot of positive, there's a lot of positives for what that can produce, right? In terms of the learn to earn potential economy. And I think, especially in the last year and a half, maybe Jeff, you can comment as a parent of having, kids learning at home. I think that, this model could really take off in a big way, especially with, families.
Yeah, I think that's right. And I think honestly, I think this also dovetails a little bit into rewards play as well, right? Whether you call it play to earn or learn to earn, effectively what you're doing is you're rewarding people for an action. And I think any action can be rewarded. And blockchain has proven to be one of the perfect ways to keep that public ledger to distribute those assets when you do something. So I think there's going to be a lot of things that come about from this idea of play to earn or learn to earn. I think one of our colleagues, David Nage, who runs our early stage venture fund, for example, he's really into this idea of decentralized identity, and the idea that your actions can be rewarded later on as well. So, for instance, instead of having to have these massive credit checks or prove that you have millions of dollars in the bank or have a W-2 to prove your job, you can do a series of online activities which basically build up your online identity or your online credit score, and you can use this for things in the future. So, sort of another iteration of the same idea, which is you're earning some sort of a reward for actions that you do, and whether that's playing a game or studying history or ultimately becoming a power user in DeFi. These things will be rewarded over time, and it's going to be pretty interesting to see how some of these projects develop going forward. Okay, one more for you, Katie, before we move on to some more quick hitting predictions. The race to solve the cross chain problem. Um, I know there's been a lot of the rise of alternative layer ones from Avalanche and Solana, Terra Luna, as well as some real growth in some layer two side chains. What do you? How do you think we get there? What is this? How do we solve this cross chain problem, and where do you see this going in 2022?
This is so I would say this is probably one of the bigger problems that's kind of facing digital assets, that a lot of I would say probably the smartest people in the space are working on, just because whoever figures it out is going to win big time. The I think the solution for the cross chain problem is actually going to be a mixture of you're going to have a few solutions kind of win out in the medium term, I would say, and then probably only one or two win out in the long term. It's kind of similar to the idea, and it really, the problem with the cross chain problem is it's kind of dependent on how do you view layer ones, and what is your kind of opinion on how the layer ones develop? Because if you do have an opinion that Ethereum wins out and it's the only one, then realistically you have Ethereum and you have a bunch of side chains kind of built on top of it. But if you're taking the stance that you'll probably have a few different chains that are going to do really well, and maybe they're specific for use cases. So Ethereum maybe is all of DeFi, all of finance runs on Ethereum. Solana becomes everything gaming related. Um, and if you kind of have your chains broken up into that, then it would make sense to only have one to two solutions that kind of bridge everything. But I think that just this last year, what it's shown as we've gone into kind of a more multi-chain existence essentially. I would say like this time last year, like the only thing you could really do on these other chains was transfer the base asset back and forth. And now we have DeFi ecosystems that are just burgeoning on several other ecosystems, and DeFi ecosystems blowing up on these other L2s. And there's just going to be a point though where like the end user and the new user that's adopting these protocols is going to say, hey, like I only want to use one thing. I don't want to have to, unstake it, go back to the main chain, go to this other L1, and then go out to their L2. Um, so I think that, you're going to see a lot of projects really compete for eyeballs and for TVL. And I think, this is much longer term outlook in terms of what will happen on this thing. I think it's going to be very interesting to see how it plays out.
Yeah, I agree. I mean, I've been on record a few times saying that I think we're absolutely destined to a multi-chain, cross-chain world where ultimately, whether that's next year, 3 years ago, 5 years from now, most users won't even know what chain they're operating on. Right? I might be playing a game that's using a Solana-based token. I might transfer that token over to someone else who's going to play a game that's on an Ethereum chain, and they won't even know that they owned the asset on two different chains. There's just going to be a lot of interoperability and behind the scenes movements that most users won't even know or care about. So I think it's certainly the biggest problem to solve for, and I think 2022 we're going to see some pretty big price advances in those that are solving that, as well as obviously the trickle down effect that if we can successfully solve this, it's going to open up a lot of blockchain usage, for regular everyday users. Okay, we're going to close here with a couple of rapid fire things. I'm going to spit out a couple of things here that, and apologies for anybody who thought we were going to give price predictions on Bitcoin or Ethereum or other tokens. That's not really what we do, but I will give a couple of quick hitters here that may or may not be controversial. The first one is I think the Robinhood effect is going to be the new Coinbase effect. And what I mean by that is, many know a year ago, 2 years ago, anytime Coinbase listed an asset, it would just skyrocket because it was giving people access to something they didn't have access to before. That's been gone for basically over a year now, where listing something on Coinbase has no effect anymore, right? Coinbase already lists hundreds of tokens. Everyone has access to different places. But Robinhood is a wild card. They've got 10 million crypto users. They only have 7 assets on their platform, 5 of which are, completely undesirable by anyone who's done more than a few minutes of research. We're talking about your Ethereum classics, your Bitcoin caches, the assets that nobody would actually own if they understood what these were. I think if Robinhood starts listing tokens, especially in sectors that people care about, whether that's gaming, NFTs, DeFi, Web3, I think you're going to see massive price moves every time Robinhood lists a token. What do you think? Agree or disagree?
Agree partially. I just think in general, most people who are looking at some of these assets are already kind of investigating them on some of the decentralized exchanges that are available.
Got it. Okay. Next one. I think we're going to see a massive expansion of token issuers. It's not going to be just protocols and, like I said, crypto native companies. You're going to start seeing municipalities issue more tokens, potentially universities issuing tokens. I'd love to see an NYU coin or a UCLA coin or something, a Notre Dame coin. I think small corporations, maybe not necessarily the big Fortune 500 companies, but your local restaurant, your barbers, your gyms, will start to introduce tokens to try to attract customers and build loyalty within existing customers. And I think there's going to be a lot happening finally in the quote unquote security token world, where we actually see meaningful adoption of tokenized equity, tokenized debt, tokenized real estate. Agree or disagree on any or all of the above?
10% agree. I think, if anybody takes away anything from, our predictions for next year, I would say that the, rise in NFTs, the metaverse, and kind of this, idea of using rewards to, create stickiness with your customers, that more so than anything else has really caught the eye of non-digital asset native companies. And for so many of them, they're currently working on, it's very clear that most of them are working on some sort of strategy to get involved in this space.
Very cool. Well, it'll be exciting to see all the different types of tokens we'll get to invest in. Okay, last one here, probably the most controversial, especially for those who are diehard Bitcoin maximalists. I think that the growth in institutional capital that we're seeing here from all types of new investors is basically going to change the lexicon that we currently use. Anything related to Bitcoin dominance or altcoins, all these just completely outdated terms are just going to completely go away. I think Bitcoin dominance is going to head towards the lowest we've ever seen, probably eventually getting to sub 10%. And the reason for this is I think the most investors who are coming in this space now have graduated from, do I have exposure or not, to now actually thinking about what type of exposure do I really have. It's no longer going to be binary. And as a result, you're just going to continue to see education increase, right? People are going to get smarter about what they own. They're already starting to realize that owning something like Ethereum is totally different than owning something like Bitcoin. Even owning something like Avalanche or Solana or Luna is very different than Ethereum. Owning something like a Helium or a Chiliz or an Axie Infinity is very different than owning a layer one protocol. I think we're going to see just a complete a complete new taxonomy around digital assets, where it's no longer just Bitcoin plus the others. I think it's going to trickle into the media. I think it's going to trickle into investors' playbooks, and ultimately, what that means, more importantly for the market, is we are never going to see a big broad-based decline ever again. This idea of cycles, which are nonsense in my opinion anyway. This idea of 4-year market cycles, even though we've only had n equals 1 in terms of events over 4 years. I think these broad-based cycles are gone. You're going to start to see the digital asset space look a lot like equities, where just like when tech stocks are down, healthcare stocks are up. You're going to see the same thing happening in digital assets, where DeFi is down and gaming is up, or Web3 is down and layer one protocols are up. I know people mostly disagree with that. They still think Bitcoin drives everything. I just think that is nonsense. It's not going to happen. The conversations we're having are indicating that people just don't care about Bitcoin as being a proxy for the market anymore. Agree or disagree? I'll put you on the hot spot.
Partially disagree. So I definitely agree that, we're getting away from the market just being Bitcoin and everything else, or Bitcoin and altcoins. And I think we're getting to a point where people are way more sophisticated about understanding what kind of makes up that everything else basket. And kind of thematically, putting everything into buckets in their mind, similar to having tech stocks, healthcare stocks. I would say, however, that I don't think that Bitcoin is going to become this kind of like little, piece of the market ultimately. Maybe like, I don't know, 10 or more years from now, that might be the case. But I think that we also have to think of the way that people consider Bitcoin is, most people, first of all, still don't understand enough about digital assets, and Bitcoin is still the only thing they've really ever heard of or that I get asked about the most. So I think there is still a lot of education to go. I think the second part is that Bitcoin represents more than just like the first digital asset and this kind of this this digital gold. It really represents the entire technology that underpins every digital asset. Um, you know, I was talking to somebody recently, and they explained to me that if Bitcoin is a technology, if the blockchain that underpins Bitcoin does not work, none of the other blockchains that are in existence can ever be guaranteed to work. And I think that's kind of an important part. And it's I mean, I know it's maybe not, there's no real clear analogy to it in the real world just yet, but I think the idea is that if Bitcoin as a technology is kind of what people look at, and I think that it still carries a lot of importance, and as a result, it's still going to be kind of this standard bearer in the space, and as it should be. It's still never been hacked. It's still never had any technical issues or downtime. It's the only network that has not faced any of these problems, and I think for that reason, it's going to continue to be important.
Very good. Well, that's why you are the brains behind the operation here at Arca, and I'm just the one who articulates them. But I will say this: I am not at all negative on Bitcoin. I own a lot of Bitcoin personally. We have various funds who invest in Bitcoin. We actually have our own Bitcoin passive fund for people who want us to handle all the custody and everything else with it. I am not negative at all on Bitcoin. I think Bitcoin could end up being a $10 trillion asset one day, and I still think Bitcoin dominance will fall to 10 or 20%. That's how bullish I am on the rest of the space, including all of these new entrants, like I mentioned, municipalities, universities, small corporations. I just think the size of the digital asset market is going to be so big that even if Bitcoin goes up 5 or 10 or 20x from here, it still will not be anywhere close to a dominant part of the overall market. So I will leave you guys with that. It is not a negative or bearish Bitcoin stance. It is a incredibly, incredibly bullish stance on what is to come in the rest of the market. Okay, well, Katie Talati, we hit our 30-minute mark. Thank you for joining me on That's Our Two Satoshis Live. For anyone who wants to read the full update, which we left a lot out, we didn't discuss everything here, but the Arca 2022 outlook, themes, and narratives we're bullish on can be found on our website. That's ar.ca. Look forward to hearing some comments, what people agree with and disagree with. I think this is the last one for the year. So again, thank you, Katie, and look forward to hearing your thoughts in 2022 and beyond.
You're welcome, Jeff.